Good afternoon and welcome to the Blue Line Metals Edge here for Thursday, September 8th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. You watch this on YouTube, be sure to like and subscribe to our videos. And if you need additional information, go to bluelinefutures.com or send an email at info@bluelinefutures.com. We love to hear from you. Got a few different news events coming out. Otherwise, markets, bit of a quieter session, a lot of reversals from what we saw yesterday here. So ECB, they had lifted rates by an unprecedented 75 basis points to fight inflation. So saw a couple things here. The Eurozone, they noted the same thing as everyone else, that inflation is uncomfortably high and rising, and that new ECB forecasts show higher inflation and lower growth. So that was what we're expecting here. They're kind of a bit behind on where the U.S. is, although their inflation's a bit higher than ours. So looking at our own FOMC meeting, the new Fed Watch tool here, it's got it at an 84% chance that we're going to get a 75 basis point rate hike. What you want to start watching in addition to it is click on this tab here, go to the November. That puts it at a 78% chance that we've got a 50 basis point rate hike coming in the November meeting. And then I believe in the December, they have it as a 25 basis point. So that should conclude out the year there. So you could kind of build out, where we're at and what to expect going forward. So none of these rate hikes here should be of any, shouldn't be shocking to you at all because of that data. So, Fed Chairman Powell, he vowed to raise rates to fight inflation until the job gets done. That's what they're factoring into those markets here. So looking at economic data that came out, Fed Jerome Powell, he did speak here earlier today. There are a couple other Fed speakers out there. Other than that, the data came out really quite muted. I think that the market was really looking at a few different things here. It was looking to see whether or not it could build on and extend on to the gains we saw in U.S. equities. And if you look here, this is a 5-minute chart. We've been rallying since the start of the day, since the open. Not only the S&P, the NASDAQ, it was a bit weaker, but since the open, it's been coming up. And the same thing with the Dow Jones Industrial Average. So looking at some of the probable ranges, we're getting close to this upper end of the boundaries here. So you want to look at, like on the S&P, 33.94 being the high. Check out the upper end of the range here, 40.15. This is where you initiate some new short positions at. Same thing on the NASDAQ and the Russell, as they're all in bearish trend. Now, oil is the one that we're still watching, because if it doesn't get a big snapback recovery, it's going to go neutral trend today. So we're going to end up cutting down and reducing some of those positions out. If you look at the way the system is positioning, it's actually positioning on the downside for oil. So looking at gold here, here's that chart. Here's kind of that double bottom that we're seeing here. And this 1685 is extended back on the monthly chart, going back for about 2 years. So you want to keep an eye on that level as well if you're on the long side of gold. Gold has pulled back. I know a lot of the funds are waiting for it to get closer to 1700 before they reinstitute some long positions there. If you look at the system, it is short at the moment here. So a lot of mixed signals coming out. It is quite profitable coming into yesterday's settlement. This 1749.70 should act as a key level of resistance. I did outline the commitment of traders, where we're at. A lot of liquidations going on in that market as well. Silver, much better setup. And you have this simple equation that's going on, that is, you get oil prices come down, inflation expectations come down, interest rate expectations come down, although I think that they're cemented where they're at right now. The only thing that we could do is have those come down just a touch if that inflation data comes out, especially that September 13th data. If it comes out a little bit softer, you see those inflation expectations come down. Otherwise, dollar index will come off on that, and your equities and your gold and silver should rally on that type of news. So keep an eye on that. Here on the silver market, that call spread, congratulations to a lot of you guys that have that position on. That's working out real well. It's done. It went into the money here today, so it looks really good. The reason why we're using a call spread, not adding additional futures, is because the gold-silver ratio, it's at the third highest level that we've seen here on a multi-month period, going back to 1980. So gold in relation to silver, quite cheap. Copper market recovering here just a touch. No real news out of China. I mean, copper's been so dependent on China and their recovery. They're not having lockdowns. If you look at LME, those stockpiles are sinking to a multi-month low. So I think that that's the main support. Platinum's one that's been shooting up. We're looking at kind of this 50% retracement. If we get back up near here, we'll probably reduce the position from this recent low to high, and we're just shooting right up through it. So we'll see if we could chew through some of this resistance, the 50-day moving average right here. If you look at the system, it has been short. It does have a quite a tight stop here. You know, if you look, 872.40 is really the spot where you should be getting out, and then 921.30 is where it'll go back into that neutral stance. So we get up there. Let's see if we can build onto those positions. You can see that platinum is one of those markets that tends to trend real well. So if we can get this nice trend back up, we'll end up taking profits or trailing that stop. Going into some other things here, the NASDAQ, the market is short. It was overdue for a bounce. We got that bounce yesterday, and let's see if we can roll back over to the downside. The system is short on the market. The buy trigger is going to be 13,302. I went over the Fed Watch tool already. Nothing new on the 2s and 10s. The dollar index, it is correcting from that overbought territory. However, we're a bit firmer here on the day. The crude oil market, this is the one that washed out, broke support. I put up the front month because you do have a death cross going on, the 50 days crossing over the 200, and that could have added some more selling as a lot of people just follow golden crosses and death crosses out there. So I cut the dates out of the report because it was looking a little funky when I would post it. And then also I cut the Fed or the OPEC watch tool because of its high degree of level of inaccuracy, especially surrounding the other meetings. So we're going to want to keep that in the back burner, and we'll look for if there's any new refresh probable ranges. I may or may not be able to get this report out tomorrow or a video because I'm going to be traveling back up to the home office. If you have any questions, futures options trading, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.